All right, the Nasdaq down almost 2% today. Does that mean we're starting a stock market crash, or is it a buying opportunity? Well, I actually think it's a little bit of both. So stick with this video because I'm going to walk you through the logic and where there is opportunity to buy and where you should think about selling. So let's start with why the market went down today. Very simply, the large cap tech stocks like NVDA and Apple, Microsoft, and so on, they have been the place where money has flowed in this environment of higher interest rates. Most of the market has not done that well. When you look at the indexes like the S&P 500 and the Nasdaq 100, you think, wow, the stock market is really performing greatly. The problem is most stocks haven't participated. The reason those indexes look so strong is because they are market-weighted indexes. That means the largest companies in the index have the heaviest weighting. So in the case of the Nasdaq 100, NVIDIA is the largest company in the Nasdaq 100, so it has the greatest weighting, and it has done very well, so it has lifted the index higher. It really doesn't represent the 100 companies in the Nasdaq 100, nor does the S&P 500 really represented by all 500 companies. It's mostly NVIDIA, Apple, Amazon, Google, so on and so forth, Microsoft. Those are the stocks that have done well. They're the biggest companies in the index, so they lift them higher. All right, so why did the market go down today? Well, today we got a consumer price index number, which was less than expected. Now, why is that important? Because the market's primary focus, very simply, is when is the Fed, US Fed, going to lower interest rates? We've seen the European Union Central Bank do it. We've seen the Canadian Central Bank, others have lowered interest rates, but the Fed, the US Fed, has not really done so yet. So when a lower CPI comes in, a lower consumer price index, it implies less inflation and therefore a greater chance that we're going to see an interest rate drop, which means that the motivation for holding these high-flying tech stocks, which are insulated from interest rates, high interest rates, is the motivation is no longer there. So people are starting to take profit on those stocks, and there's a broadening of the market, which is why when we look at the Nasdaq chart, we see a pretty substantial sell-off there. And if I look at the Russell 2000 index, which is the small cap index, I see a pretty strong gain. In other words, we had two stock markets today. We had the large cap tech stocks selling off, and we had money flowing into most other stocks. Most of the market was strong. So you see the Nasdaq down almost 2%, and yet the IWM was up. So what does that mean then? Are we going to see a stock market crash? Are we going to see an opportunity to buy? Well, I don't think you want to be a buyer of those large cap tech stocks. Now, I did a video a couple of weeks ago on NVIDIA giving a sell signal. That was right here. And now NVIDIA has broken down from a falling top. So if I draw a trend line on NVIDIA, you can see that we are still above the trend line, which is a positive. But given that we've made this falling top, the market for NVIDIA is very dangerous in that if it breaks that upward trend line, we're probably going to see more selling pressure. So in my mind, I think more than likely, not 100%, nothing's ever 100%, but most likely you're going to see some profit taking on NVIDIA. It's going to pull back and it's going to drag the Nasdaq down. And if we look at some of the other tech stocks, they don't look as bad as NVIDIA, like Apple, for example. Apple's pulling back from a new high. So it will probably pull back over the next week or so and just come down to the upward trend line where it will bounce. And that could be a buying opportunity on Apple. If I look at Microsoft, you see it too is coming off of a high. Let's try Google or Alphabet. It is still in the upward trend. So we're not seeing like a desperate situation in most of these large cap tech stocks. It's really only in NVIDIA where we're getting that breakdown from a falling top. But I do think it could be a contagious thing. If NVIDIA sells off, some of these other large cap tech stocks are going to come down as well. Plus we had Tesla, which has had a great run over the last couple of weeks. have a pretty strong selling day, not a great surprise, because when markets rally up to resistance, and there you see resistance right here, they usually get stuck in resistance. Very simple rule that I apply over and over again, works really well. So Tesla rallied into resistance, and then the sellers found some motivation to take some profits today. Yeah, they said they were extending out their project on driverless taxis, but everybody expects that Tesla's going to be late on that kind of stuff. They always are. So the point is, there's selling pressure in some of these high-flying tech stocks, and the money is flowing into some of the small cap stocks. Now, if we were to do a market scan on Stockscores here, I'm going to run a scan called Abnormal Breaks US, and we're going to look for stocks under $20 because I'm going to show you the problem. So stocks under $20, and let's have fairly liquid names, so at least 5,000 trades today. Run the scan. So there's 139 stocks that had an abnormal price gain today in those low-priced areas, those stocks under 20. Now we're going to look at some of these charts, and I'm going to go in what we call a gallery view where we can see lots of little charts. Here's the problem, is a lot of these tech or these small cap stocks are breaking up into pessimism. So here's an example. This is a real cheap stock, but it emphasizes the point. It had a good update today, but it's going to be fighting against this negative sentiment. What we want to do if we're going to be a buyer of some of these small cap stocks is to wait for the momentum to start to turn. Here's an example. The typical pattern for a reversal of long-term weakness is the break of a downward trend line, the build of a rising bottom, and then a break up from a rising bottom. And we like to see strong volume in support. This one kind of has it, LPSN, but it doesn't have strong volume. It's not quite breaking out through resistance, but that's the sort of pattern we want. If I was to draw it again, the typical reversal pattern is the stock's in a downward trend, it breaks the downward trend, it builds a rising bottom, and then it breaks up from a rising bottom. I call this a bottom fishing pattern. And you're going to start to see these, most likely, in those small cap stocks and in the broader market in general. If money flows out of those large cap tech stocks, people start taking profits. The profits are wonderful. Lock those profits in and put some money to work in the broader market. See if we can find another example of a stock making that reversal pattern. See, here's a stock that was up today, but it's still inside the downward trend. Don't touch that kind of stuff. Wait for them to make that reversal pattern. Here is a stock that has a pattern a little bit better. There's your downward trend line. There's your rising bottom, and it's breaking up from a rising bottom. I don't love this one because there's a lot of stock traded in this price range, and that will be a resistance level. All of these things that I'm speaking about, I teach in the material at stockscores.com. You can go there if you have an interest in that. Let's just keep looking at these charts. Here's a pretty good reversal pattern. So downward trend, break of the downward trend, build of a rising bottom, break up from a rising bottom. What's missing is strong volume. The volume there today was okay, but not abnormal. And I like to see the abnormal volume. All right, so in the weeks ahead, start to look for opportunities in the broader market outside of the high-flying big names that we're all familiar with, Apple, Amazon, NVDA, Microsoft, so on and so forth, because I think we're going to see some profit taking in that area. I don't think we're going to see a crash, but some profit taking and money rotating into the broader market as investors start to speculate on the interest rate picture changing. Now, one last chart before we go. Let's take a look at the bond market. TLT is the symbol. And you can see here that we had a move to the upside in the bond market. That means interest rates go down. If the bond market goes up, interest rates go down. It's still not a stellar chart, but it is one that is slowly improving. Because here's the downward trend line. We broke that 4 or 5 weeks ago. We've already built the rising bottom. And if the bond market can start to move up through this resistance level, you're going to see the market basically pricing in a drop in interest rates by the US Federal Reserve. That will help the broader market, and it'll also probably motivate some profit taking in those large cap tech stocks. Hope you've enjoyed this video. If so, click on the like button. Leave a comment. Do you think it's time to sell those large cap tech stocks and move into something else? Or are you going to stick with the winners? I'd love to hear your thoughts. Subscribe to the channel, and as always, Trade well.